Oracle's stock has been on a tear recently. Since 2023, it has more than tripled, and the company's market cap now sits at almost $800 billion. But if you asked any analyst a few years ago, almost none of them would have expected Oracle to deliver such outsized gains. Historically, Oracle has been best known for making enterprise resource planning, or ERP, software, as well as customer relationship management, or CRM software. These allow large corporations to keep track of their internal data, as well as data about their customers. While this is a very profitable business for Oracle, it is also very mature. Pretty much every large corporation already uses an ERP and CRM, so there's not very much room for growth. If we look at Oracle's financial performance over the past few years, they haven't been growing very fast. Their revenue and profits have increased a little bit, but nothing that would seem to justify a tripling of their stock price. In addition to their enterprise software business, Oracle also has a cloud computing business. Recently, they've gone all in on the AI bandwagon and have plans to spend tens, if not hundreds of billions of dollars to build out new AI data centers. On September 9, 2025, Oracle announced that it had $455 billion of remaining performance obligations. These are contracts that have been signed for services that have not yet been delivered. It's their order backlog. This is an insane amount of future revenue. This backlog consists almost entirely of AI companies booking deals for Oracle to build new AI data centers for them to use. The single largest customer is ChatGPT maker OpenAI. OpenAI is believed to have signed a $300 billion deal with Oracle, representing well over half of the total backlog. This massive deal is what's driven the gains in Oracle's stock price. Despite the investor enthusiasm, there are still a few unanswered questions. How long will it take Oracle to recognize the revenue from this $455 billion AI backlog? What will the profit margins be? And perhaps most importantly, how will the customers like OpenAI be able to come up with such massive amounts of money? Oracle's enterprise software business has extremely high gross margins. There are fixed costs associated with developing and maintaining the software, but the marginal cost of signing on a new ERP customer is almost zero. The margin profile of data centers is very different. There is a massive upfront investment required to build the physical structures of the data centers and fill them up with expensive NVIDIA GPUs. Then there's the ongoing cost of operating these data centers and supplying electricity to them. The single largest ongoing cost for AI data centers is likely to be the depreciation of the incredibly expensive NVIDIA GPUs. If the GPUs are well maintained, they can last for a very long time. The issue isn't so much mechanical depreciation as it is economic obsolescence. At least once every 2 years, NVIDIA releases a new data center GPU that's significantly better than the previous one. In 2020, they started shipping the A100. There are many performance metrics GPUs can be judged by. To keep things simple, we'll look at just one metric, the data bandwidth. Basically, how fast the GPU can process data. The A100 can process 2 terabytes per second. The next generation was the H100, which was released in 2022. It can process 3.35 terabytes per second. Released in 2024, the H200 can process 4.8 terabytes per second. The latest and greatest GPU is the B200, which began deliveries this year. It can process 8 terabytes per second. In just 5 years, the bandwidth quadrupled. It is widely expected that NVIDIA will continue to release new models of GPU with significant performance improvements for the foreseeable future. As computing power increases, the various AI startups such as OpenAI, Anthropic, and many others respond by making larger and more computationally intensive AI models. These become the industry standard, and people don't want to use the older, less advanced models. Eventually, the older GPUs become less valuable. It will become impractical or even impossible to run the largest new AI models on older GPUs. They will eventually become obsolete and need to be replaced. There's an AI data center company called Lambda Labs. They offer the latest B200 GPU as well as the older H100. For on-demand usage, the B200 costs $3.79 per hour to rent. The H100 costs significantly less at $2.40 per hour. There's a company called Silicon Data which keeps track of H100 rental prices over time. You have to pay to get the full time series, but we have enough snippets of the index to get a good enough idea of what's going on. The index started in September of 2023. At that time, the H100 was the latest and greatest data center GPU available. It cost $3 per hour to rent at that time. As of October 2025, the average price has declined to just $2.12. That's a decline of approximately 30% in 2 years. To be clear, H100s are not yet obsolete, but as it has been superseded by the B200, its value has decreased very rapidly and will likely continue to decrease. The rate of depreciation going forward is highly uncertain. but it will have massive implications for the lifetime profitability of new data center projects. Oracle does not separately disclose the gross margins of its software and data center businesses. They report one segment that includes both software and cloud data centers. Over the past few years, the data center business has been growing, while the software business has been largely stagnant. In the quarter ended August 31st, 2022, 38% of the segment came from cloud data centers. The combined segment reported a gross margin of 81%. In the quarter ended August 31st, 2025, cloud data centers grew to 56% of the segment. The combined gross margin fell to 72%. Clearly, the data center business has lower gross margins than the cloud segment. But how much lower? In October of 2025, The Information published an article about Oracle. They claimed to have seen internal Oracle documents. The documents showed that in the quarter ended August 31st, 2025, Oracle generated $900 million of revenue from the rental of servers powered by NVIDIA GPUs. On this $900 million of revenue, they generated $125 million of gross profit. That's a gross profit margin of just 14%. To be clear, this is just one snapshot in time. Maybe the GPUs are being underutilized as Oracle is still trying to match them with customers. Oracle itself says it expects to achieve much higher gross margins than what The Information is reporting. In a recent investor presentation, Oracle showed an illustrative example of how much profit they expect to make from their AI data centers. They say they expect to make 35% gross margins. To be clear, this is just an illustrative example with made-up numbers. We don't know the details of any of their contracts. We also don't know what depreciation schedule they're using for their GPUs. Now let's talk about the massive $300 billion deal they signed with OpenAI. In July of 2025, OpenAI announced a partnership with Oracle. Under the partnership, Oracle will build AI data centers large enough to consume 4.5 gigawatts of power. To get a sense of how massive this is, assuming that the data centers operate continuously throughout the year, they would consume slightly more electricity than the entire country of Bulgaria, which has a population of 6.4 million. According to media reports, the deal is worth $300 billion. Construction of the data centers has already begun. Oracle will incur the cost of building and operating these data centers. OpenAI will pay Oracle to use the data centers to train and run its AI models. The deal is reported to last for 5 years and start in 2027. So from 2027 through 2031, OpenAI will pay Oracle $60 billion per year, adding up to a total of $300 billion. So how is OpenAI planning to come up with the $300 billion? This year, the company is expected to generate just $12.7 billion of revenue. The company is currently losing money as its revenue is not enough to pay for its existing compute needs. In September of 2025, NVIDIA signed a partnership with OpenAI. Under the partnership, NVIDIA will invest up to $100 billion into OpenAI, but that funding will come in tranches. For each gigawatt of data center capacity OpenAI builds, NVIDIA will invest $10 billion. The Oracle deal is for 4.5 gigawatts. OpenAI will get $45 billion from NVIDIA. They still need to come up with another $255 billion. One potential source of funding is a Japanese investment company, SoftBank. Shortly after Trump's inauguration, SoftBank CEO Masayoshi Son promised to invest $100 billion, or maybe $200 or $500 billion in the US, mostly in AI data centers. This is part of the nebulous project Stargate, which Trump announced to great fanfare. Both Trump and Son love throwing around massive numbers, which may or may not ever come to fruition. As of June 30th, 2025, SoftBank had 4.2 trillion Japanese yen of cash on its balance sheet. That's equivalent to approximately $28 billion. SoftBank couldn't fund 10% of the Oracle deal even if they wanted to invest all of their remaining cash. It should be noted that SoftBank has already invested billions, if not tens of billions of dollars into OpenAI. In April of 2025, SoftBank led a $40 billion funding round in OpenAI. Leading means they were the single largest investor in the round. $255 billion is a huge amount of money, even for OpenAI. OpenAI recently achieved a $500 billion valuation in a secondary share sale. But no matter how big your valuation is, there's a limited amount of venture capital to be raised. Since the release of ChatGPT, OpenAI has raised approximately $60 billion, mostly in the form of equity, but there was also some debt. They raised about $10 billion in 2023 and 2024. They raised $40 billion in 2025, mostly from SoftBank. A lot of this money has already been burned by now. OpenAI will need to either become profitable very quickly or raise more than 4 times this amount to pay for the Oracle deal. So what does Oracle think about this? On October 13, 2025, Oracle's co-CEO Clay Magork gave an interview to CNBC where he was asked about this very question.
They're supposed to pay you as much as $60 billion a year starting in not too long. They're going to be good for that money, I would assume.
Of course. No, I think look, this is exactly Mike's point. If you look at the financials, if you look at the results, if you look at the growth, if you look at the products that we're able to build with this technology, this is unlike anything that's happened before. These are not typical ways that companies have been founded and grow. I mean, just look at their the rate at which they've grown to almost 1 billion users. That's just unheard of.
Yeah.
And
all of this is unheard of, frankly. But the numbers that we're talking about are unheard of as well.
And I think that's what people are struggling with. Is they go, okay, is this unheard of in a bad way or is this unheard of in a good way? And we think it's unheard of in a very good way.
OpenAI claimed to have achieved 1 billion users in April of 2025. The vast majority of these are using the free version of ChatGPT. Despite having such a massive number of users, OpenAI expects to only generate $12.7 billion this year. A lot of people are using AI, but so far, most of them aren't willing to pay very much for it. Maybe over the coming years, OpenAI will release new AI tools that are so advanced that people will be willing to pay high prices to access them. But what if this doesn't happen? What if OpenAI fails to generate hundreds of billions of dollars of revenue? Remember that Oracle has to fund the construction of these data centers before they start receiving any revenue. It is estimated that Oracle will need to borrow $100 billion to do this. Oracle has now joined the growing list of big tech companies that are betting the farm on an AI boom that is yet to materialize. Alright guys, that wraps it up for this video. What do you think about Oracle? Will OpenAI be able to come up with $300 billion? Let us know in the comments section below. As always, thank you so much for watching and we'll see you in the next one. Wall Street Millennial, signing out.